And there you have it, the closing bell at the New York Stock Exchange, signaling the end of another trading day, a relatively flat day for U.S. stocks. The Dow Jones closed up around 30 points. The S&P and NASDAQ ended the day in negative territory. Both finished down about 0.1%. Joining us now is Joe Saluzzi. He is the partner and co-founder of Themis Trading. Joe, welcome. Great to have you with us. So what drove the markets today? Actually, nowhere, since they ended up flat.
Hi, Tanya. Yeah, today was, a sleepy Monday summer day, I would say. The summer's been really active. We've been really volatile with all sorts of different news coming out. But today was relatively quiet. There was news, obviously, of the bill in Congress that's going through, the so-called Inflation Reduction Act, which was probably the only bigger story of the day. But I would say overall volumes were light and typical for a summer Monday.
And of course, the Labor Department will release its July report for consumer prices Wednesday. So looking ahead to Wednesday, what should we expect? And how significant are those numbers in terms of what they tell us about the state of the economy?
Yeah, that's a big deal. The CPI number, or the Consumer Price Index, that kind of set off the downtrend. When we saw the big 9% number last month, those are the numbers that everyone's looking at. Okay, is that inflation? How far is this going? Can we get it under control? Can the administration do anything to get it under control? So what we're looking at is a lower number. We're hoping on Wednesday, the estimate is 8.7% on a year-over-year basis, which is slightly lower. It doesn't sound like a big deal, but it is at least getting it in the proper direction, which we want to go is lower. I think a big part of that is going to be energy prices that are going to be, obviously the gas prices have come down over the last month, so you should see that in the CPI. But you still got to be careful. You want to look for wage growth and prices paid. This is what Wall Street's nervous of, because the hotter those are, the more chance that the Fed will continue to raise interest rates, which already we're expecting another 75 basis points or 0.75% at the next meeting.
Right. And, to that point, as you mentioned earlier, gas prices are slowly starting to decline. At the same time, the job market continues to boom. Yet we are hearing that, many experts are pointing out that technically we're in a recession. What's your take on all of this?
Yeah, and that technical definition of 2 quarters of negative growth in a row is what a lot of people still use to define a recession. But, I guess we have to wait for the official NBER, which is the group in Washington that says we're in a recession. They'll tell us like 2 years from now, but we'll have to wait for that. But, I think, when you see those unemployment numbers, or they were really, the employment numbers were strong on Friday. And that doesn't tell me that we're in a recession. That tells me that we still have a good economy going. And in fact, corporate earnings is, I was looking at the numbers for this quarter, 87% of S&P 500 companies have beat estimates. So companies are still making money. Wage growth is still there, which we saw from the employment numbers on Friday. So I would say no, I don't think we're in a quote unquote recession unless it's just like I said, a really small one. But the numbers, the data will dictate that. And the Fed is looking at the data. And if it gets, too recessionary, heck, we may even get price rate decreases rather next year. But they are watching, and they're more concerned about inflation. And at this point, they're still fighting that inflation front.
Right. But to your point, as we are seeing sort of gas prices come down a little bit and some other prices stabilize, at what point will the Fed say, OK, we've accomplished what we want to do, which is not, really put the economy in a recession, but just sort of put the brakes on an overheated economy? So when do you think that they're going to say, all right, let's sit this out for a while and see if this is enough at this point?
Yeah, I think they're late. First of all, they started too late with the rate increases. A lot of people would agree with that, which is why they're kind of playing a game of catch up right now. But if they see the consumer price index numbers coming down and some of their more favored, they have a couple of numbers that they look at, the PCE deflator, if you want to call it. It's really a technical one, but those are the Fed's preferred measures of inflation. If they start to see that come down, maybe they won't get as aggressive. And I'm hoping actually that they don't get it too much aggressive, because it's harder to pull it back. Once the foot's on the gas right now, really heavy. They could take it off just slightly. Whether they do 50 basis points or 75, I don't think it's going to matter next month. So I would suggest them to do less. So that way you don't have to, cut rates next year.
Right.
But they are looking at the data. I'm glad they're data dependent, but it is going to depend on that. And wage growth is certainly a significant number that they look at.
Absolutely. Well, Joe Saluzzi, thank you so much for joining us. We appreciate your insight.
Thank you.